Now we're going to have a chat, I've got a higher one this time, about various things. But we're going to throw in, I think, call this a grab-all bag of topics and discussion. We're going to start by talking about, the Asian marketplaces and what's happening, the iBuyer model, your perspectives on it. But please ask questions. So if we have Slido up from the beginning, will be fantastic. So I wanted to run this as a bit of an open discussion. I think we did this in Madrid. I don't know if you were part of the panel or at the end. And I think it worked very well. We were having a sort of a broad range chat around a number of topics. Let's start with sort of the Asian markets. And I think, Georg, given your front and centre working in this environment, where does it all go, right, from your perspective? How are the markets going to evolve from marketplaces perspective or classifieds perspective in the Asian market?
I think one of the probably big differences is that in some markets, Asia came a bit later, but therefore leapfrogged some of the markets. If you take the example of an Alibaba or a WeChat platform and compare it now to a WhatsApp platform, so it's using those platforms far more to find, to transact, and also to pay. So to use those type of platforms. The second bit is, as we heard earlier, Asian markets have a stronger focus on new property sales due to population growth as well as due to preferences in those markets. And so where does it all go? I mean, at the moment, what I can see is there's not one large pan-Asian developed player yet in the market for property specifically, but there's obviously a couple of big platforms fighting for, let's call it supremacy in these markets, coming on the one side, the WeChats and the Alibabas, and coming from all sorts of directions. So I think that's where a lot of innovation will come from, and the question will be then, how do people use those platforms and operate on these platforms?
Is that a danger for the current, the iProperties and the property gurus in the region, that these large players with big platforms suddenly turn their attention to this segment of the market, and because they're not embedded in doing the traditional models, the versions 1 and the version 2s of the world, they can just come in and win?
I mean, from my perspective, anyone who delivers results which people really want, rather than replicates models which work outside of those markets, will win. So it will depend a bit on the flexibility and the innovation on Property Guru and iProperty to succeed in these markets. That's why, I mean, I'm not blowing their own trumpet, but that's why we went straight from advertising all the way to the end, to the post-sales services, because that's what the market really, really wants.
Okay. What are your thoughts?
I think what's fascinating in Southeast Asia is if we look at the level of monetization and compare it even to Australia, which is, I know it's extreme, but it's fascinating. RIA roughly, if you look at the difference between, if you take the total revenues of RIA Australia, divide it by the number of listings, divided by the population. If we just take the revenue, if we take the revenues of RIA in from Australia divided by the Australian population, we take iProperty and Property Guru revenues divided by the population of Southeast Asia. What do you think the difference is? Do you think it's 10x, 15x? It's a 100x difference in monetization levels. So it's clear to me that the only way we're going to create valuable long-term businesses in this region is through transactions. And I think it's a little bit, it's a story of two strategies, right? The most rapid value acceleration in this region is arguably Zameen, which has embraced most fully the direct sales model. And I think it's just generally very difficult to build a big business on listing revenues. It's a shame we don't have Property Guru or iProperty here to say, well, actually, I'm wrong because X. But I just don't see the evidence yet, the proof yet, that the listings model, even if you add a bit of lead gen on finance, so I just don't see it getting to valuable businesses or high revenue, high EBITDA businesses.
Yep. I agree. Do you have any comments on
that? I'm not going to comment on iProperty or Property Guru, but what I can say is that going into the transactions, you suddenly really increase your business, I mean, in our case, tenfold within 12 months, and you're able to grow at 100+%. That's definitely a fact.
Right. Now, but that's interesting. We're talking about 12 months, tenfold increase in the business. But how does that affect the margins? Are you just focusing on the top line revenue growth? Or are you talking about profitability growth too?
Profitability growth too. So the business will be profitable in 4 months. And it was a bit, I mean, to be very frank, 2 years ago, it was break-even point for the JUWAI business was quite far away.
Okay. So then we look at the Asian markets and how they're developing. And clearly the consensus views are going to leapfrog, and we should leapfrog, not that we necessarily will, but to the end game. What about the horizontal plays in the market? Do you see any of them sort of entering, starting to disrupt what we currently see?
In the property space, not really. More in the lower priced goods space.
I mean, I think even in Europe, the listings model has obviously gone further because you can extract more spend from agents, especially in markets where you have exclusive relationships with real estate agents. But I think it was very clear, for example, from the TOS interview, which I think was very, very candid, that it's really hard in non-exclusive, low listing quality, no geocoding or that exact addressing on properties. It's really hard to extract a decent ARPU. So I have a huge question mark on what the generalist platforms will do. Carousel looks like one which has an interesting approach. At least did 2 years ago when it was on its own. It's now been merging itself with all the legacy assets from elsewhere in the region. And I think it would be very difficult for them to turn that into a transaction-based model in the near term.
Okay, so at the beginning of the day, Malcolm, you started talking about these the spectrum, right? And really, there's the transactions, version 3 and version 4 of the model. Based on what you've seen and heard today, are you leaning towards the iBuyer model, or are you leaning, well, you weren't before anyway, or are you going back to this more of it's almost like the purple bricks model, the compass model, the ones which is about using technology, but not taking on the risk of the assets?
So I think we have to talk about Singapore and then the rest of the region, right? I think Singapore has many attributes with perhaps with a UK or an Australia for some reasons, not least GDP per capita, strength of franchises. But if we exclude Singapore, then I think I like the idea in markets where, if you think my 2x2 matrix, where the agencies don't have very high reputation or very high market share, there I would get very excited about hybrid agents. So creating a tech-enabled brokerage, and then obviously the question is where you're going to generate your traffic from. But thinking about partnerships with other players to bring that liquidity, that I see as the best way forward to really properly monetizing online property marketing.
But how does that sort of eventuate over time? Because the more tech-enabled everyone gets, and thus you're dropping your costs, and you're not going to be able to keep your margins because everyone starts to compete on price, so lowering their commissions.
I actually don't believe you compete on price. You compete on, like in the new project sales bid, in the most urgent bid for the developer, which is selling as fast as possible because it's a massive capital cost. Mm-hmm. So I think it's one of the biggest critique points I have with Purple Bricks is to say, I'm an agency and now I call myself disruptive because I advertise on REA and Domain in Australia. I mean, that was the literal, and I half or reduce my commission so much that I look disruptive. I mean, no wonder I make losses. I do not understand how anyone who is actually in a traditional real estate business loses money. I mean, that's the first thing. And if you combine it with technology, I still don't understand why you should lose money. And I do believe the times are also over that technology businesses have to lose money. I actually think they should be all profitable.
I think I've still been colored by my NASPA's day. So I think sustained unprofitability is okay if there is a network effect that in the longer term makes you bigger and stronger. So I'm there definitely on that. I do believe that yes, it's true. Look at the UK. The sort of the price ticket on a Purple Bricks is now £1,000 to £1,400 compared to 2x or more, 3x, which an agent would be charging. but the tech-enabled aspect should enable them to make a decent amount of money if they can fix the marketing. It's their marketing spend which is currently hurting the profitability. And that's why, obviously, if they have the way of getting closer to a highly trafficked portal, they can really change the game. But I would just add, in this region, if you look at Property Guru, which has been by far the most successful player in a number of key markets, excluding Malaysia, they're getting on average $6, as I mentioned this morning, $6 per property that is listed on their site, a mix between rentals and sales. And to think that there could be a model to get up to, $1,000 or so is very exciting. They would have to do more work, clearly, but I still think there's a lot of room for profitability if you can change the value proposition.
I mean, again, I'm not here to comment on Property Guru, but a business which literally loses money all over the world except for Singapore and hardly makes any profit out of 90 million revenues is not a success to me. The second bit is, if you lower the commission as Purple Bricks have done, what incentive do they have to increase the purchase price or the sale price of the property by another 50K? To me, that's far more important. So, I mean, I would be willing to pay like 10% commission on the last couple of $100,000, which I get out of it. And that's the part I don't fully understand. And this slightly more intelligent pricing is actually really, really interesting. There's a developer in Australia, I mean, it's this biggest developer, changes its prices every week and adjusts its prices every week and doesn't actually want you to sell too much because that's a sign that his prices are too low. And it's a highly profitable business, zero debt in the whole business, and funds all his developments from pure equity. I mean, he's the richest guy in Australia, so it can't be that bad an idea of what he does. But to me, that's one really, really exciting way on how to do it. And because the salespeople in his business told me if they sell more than 10 a week, they're in trouble. So they have to personally report and explain why they sold so much and why they didn't increase the price more. This is no joke.
Really? Wait a second. So if I sell too much, I'm in trouble.
Yes.
If I sell too little, I'm in trouble.
You have to sell consistently and adjust it for the price, like with the price. So what he's literally doing is trying to do almost like a stock market kind of approach for his project. So every week, the price list is sent out to everyone who's selling the projects, and it changes on a weekly basis.
But but the sales guy can't set the price.
The sales guy can't set the price.
Okay.
But if the sales guy sells too much, it's an indication that his prices are too low. And
so that's the marketing team's problem. Or
yes,
the
product
right, team's problem.
That's right. Yes.
Okay. I understand what they're trying to get at with that model. Back to this sort of hybrid brokerage or tech-enabled brokerage. Is that really what you're getting there with JUWAI and the IQI merger?
I mean, what I'm getting to is literally the situation. If you are in Vietnam and you're interested in a golden visa in Portugal, what options do you have? At the moment, you've got a lot of smaller players offering you services, and they are of various degrees of quality. It's very hard to really understand and trust someone. So what I'm trying to do is really, by making everyone across Asia in a consistent way global residents, trying to generate that trust, because one of the big advantages of technology over people is actually that technology is much more trustworthy.
Okay. So think about that before. You talked about golden visas in Portugal.
Yeah.
Do you set up a team that specializes in that, because it's a non-trivial topic, right? There are a lot of elements around getting a golden visa, more than just spending your 250,000 euros to buy a place. Do you have a team that then can service any request, whether it comes from China or it comes from Taiwan or it comes from Philippines?
We do. I mean, we have domestic teams who are specialists in specific markets, and
yes.
we have teams for the other markets, like an international team, which we call it, which is a bit more knowledgeable in these areas. But the best way, actually, not to overwhelm yourself is to be very, very selective, and yeah.
Okay. For those who don't know, Andrew Taylor was the founder of JUWAI and a former REA employee. So anyway, but do you think a global portal is possible?
A global portal is possible. What is a global portal? I mean, define global portal.
Remember Limudi? Anyone? I mean, that was, let's face it, one of the first attempts to do one size fits all, especially, well, they'll argue with minor nuances. And it didn't really work out very well because in the differences in how property was bought and sold locally did change from market to market across the Asian and African markets which they were focused on.
I mean, for me, a global portal is literally possible in new project sales, probably easier than in established project sales, and providing a full a representative cut. I mean, at the moment, JUWAI has 90 countries on the website. I think that's sufficient to claim to be global. And if you're able to service all these 90 countries, then you're truly global.
Okay. So just a comment on that. I think the challenge here is the Lamudi approach was really just a marketing, traditional advertising, a 1.0 or 2.0 portal, where I think the only way you really crack that code is by getting into the services element, because the problem is not advertising a property. I can go, if I want to go live in Australia, look at REA. If I want to look in England, I look at Rightmove. I can do it, and if I don't speak English, I'm going to struggle going there anyway, right? There'll be challenges in buying property and actually interacting with local providers, etc. So assuming I have some knowledge of the language that I'm going to, or I have at least the capacity to use the translation on Chrome, right, which will then do the same job, I can do my own search on the people who are the experts in that area. Where I truly need help for cross-border transactions, which is really what a global portal would be trying to solve, is what you're doing, right? Which is about how do I have someone who understands the end market, understands the nuances of buying property in Canada or wherever it is, and can help me through that maze so they end up with what I want at the end. That's where I think the true value is created. The advertising is not where the value is.
I think there's another spin on the question is, will there be a Google or a Facebook of property, right? And I think my view is it's the broad versus deep trade-off. So the broader you go, I guess we get to Mitula, right? To be fair, it's the aggregators who are the broadest in terms of the lead gen model.
And the shallowest.
And the shallowest.
Yes.
And if you want to go deep, you have to get very local. And there's no point in doing that on a global scale. I would, however, argue that especially smaller countries, going deep into the transaction requires a much deeper investment in tech and in processes, and I suspect it would make sense to do multi-country, especially when we get to the small, sub 20 million, sub 30 million population countries.
Yep. Okay, so then let's have a quick chat about iBuyers, because we sort of did a bit of a presentation and such about it, and you brought it up, and I don't say half a dozen people have brought it up. Do you still have the view that it's a bit of a fad at this point in time? I mean,
how would we dare to disagree with you, Simon?
You can clearly disagree with me. You wouldn't be the first, and I've got kids, so yes.
Look, I think it can only be, in my view, an interim measure, because the idea that in order to sell a home to from one individual to another, you first have to sell it to a company that has to take on debt so that it can then be sold to the next person. Why the hell not just transfer it directly from buyer to seller? So in other words, what's missing is the ability to match properly. And I think portals will get better at this. They'll have better data on the buyer and the seller side. They will qualify leads better, and they'll be able to bring the two sides together. And I'm calling that a trust-enabled marketplace. But there are different ways of getting there. But that's why I think iBuyer it's nice. It's tactical. It gets lots of seller leads. It might get leads for ancillaries. I just think it's a very capital inefficient way of trying to do a better job of helping consumers sell property.
I have to fully agree, and I can't get my head around the loss number per property transacted which you put up, and I can't see what this $6,000 actually creates in terms of asset. If you take the approach of saying that's an investment by the company in something, I'm wondering what assets are being created as a result of it, and I can't see any.
Yeah, I have a feeling that the iBuyer model was a solution looking for a problem, and the problem that the solution found was a company with 175 million visits per month, or whatever the number is that Zillow has, $1 billion worth of revenue and $1 billion worth of costs. And that long-term model was going nowhere, right? The market was sort of getting a little bit tired with, yep, you're going to make money when? From the traditional advertising model. And given the inherent structure that you have in the US around with the MLS systems, etc., they were never going to make money, right? It's very, very hard. So therefore, they've done all the work of creating assets around brand, AVM model, traffic. Now, how do I use that? Well, hey, let's go and buy property, do the iBuyer model, because it's exciting. So it's really, I think, a solution looking for a problem, and the inherent problem was, how do I give the stock market something that's going to be super exciting so that select people can actually become billionaires?
It arguably also gives them a sort of Trojan horse to get more directly into the transaction, right? They're claiming that they're still involving brokers, either especially on the buy side, but I think it's getting Zillow deeper into the transaction, and then lo and behold, I would expect them to be offering this trust-enabled marketplace in some segments somehow,
yes.
because I don't see where else they can go.
Yeah.
It's slightly above my pay grade, I would say, or at least mental capacity. I'm a strong believer, if you transact a property, there should be a, 40% incremental margin at least for the one who provide the platform.
Yep, agree. And what's interesting, Malcolm, is that I read the other day, maybe last week, that Zillow has been applying for some real estate licenses quite quietly in the market. There's a couple of articles, if you go and Google it, you'll pick up that. So clearly what's happening is someone's got to be sitting there and thinking about the future, and wait a second, well, I've got to do how many transactions to break even, and everything else has got to go right to get there.
So maybe it's a way of, sometimes companies take what looks like an irrational way of pricing others out of the market and then coming out with a new model. Yeah. I'm not so sure it works, but good luck. I think there's other ways as well to do it, but maybe that's the aim, because eventually nobody can compete, because literally the property prices almost should increase, the $6,000 will become part of the market and part of the expectation.
Yes.
Somebody gets these $6,000, and but I can't see it.
Yeah, at the moment it's the guys who do the repairs and the renovations.
Yeah, so it's always good to be a tradesperson, by the way. They always make money.
They do, I know. I had an electrician around recently. Criminal. So given all of that, and if you then start to dust off the crystal ball, right, and we went and say, well, what does it look like so if we go back 10 years, right, we're not really having these conversations, or they're very hypothetical conversations. We're probably talking about, maybe some portals will be selling some real estate or something. Now we're knee deep in the transaction world. You've got the Zillows doing the iBuyer model. You've got all these things happening. And if you're not in the transaction space, people are starting to go, why aren't you, right? You must be part of the old world, right? The Rightmoves and the REAs, etc. How are you going to innovate? So therefore, what does the next 10 years look like? What are we going to see that's fundamentally different in 10 years' time? How will what we even know today have been disrupted?
I think I gave the answer this morning. I think we're going to see C2C is going to become huge. That's my prediction. We don't need brokers anymore to buy and sell homes. That's where we'll get to. And I just think it'll maybe happen earlier in emerging markets and a bit later in the sort of high GDP markets. But why would you, if we're so used to booking holidays, et cetera, online, why wouldn't we do the same? Once we have all the trust enablers, right, we have to have perfect, we have to have accurate data, guaranteed data, mechanisms for transferring title online or as online as possible. But within 10 years, there's enough time to do all of that, I would expect.
And I would expect the markets to be far more liquid, almost like share markets, and they can take all different forms. If you think about it, it didn't come up yet, the whole area of fractional buying and other things. All these things will come together and simply give a real estate the liquidity it actually needs. If everybody, or if on average everybody puts most of their money into real estate, it's time these markets get more trusted and more liquid.
Yeah, and I think the big issue that's going to arise in the next 10 to 20 years is the aging population, because a lot of the real estate value is tied up in people who are 60 and above, and as they become, I was going to say by the use-by date, but if they get older, they've got to, and their key asset, and sometimes their only asset, is what they're living in, but you can't eat that, you can't drink it, you can't go out and enjoy it beyond just living it. So I think part of the solution of a real problem will be how do I release the value that's tied up in
Yes.
real estate today for older people?
Exactly, and that's not just by selling, but also maximizing the use. I mean, if you have an investment property, the flow and so on, there's a lot of room to improve. I mean, we spoke about the tradespeople who earn a lot of money. That's where probably also a lot of disruption will and should happen. That somebody said, it's a bit like when you have a car, you don't always go for the workshop, even if you have to fill up the car and so on. So there's a lot of players out there who can help in this space. And I think that's where the real money is. I mean, the 1 or 2% on the sale commission is a nice saving, but the ongoing payment, an ongoing pain, and the low yield of many, many rental properties is really an area to address.
Maybe just to add a few more illustrations. So I've seen at least two models which are getting traction. One is models which provide sort of medium-term rental options to people who are living on their own in homes, right? So rather than have to move out, fill up a room, but done sort of spotter home style with the proper end-to-end process. That's one dimension which I think has a lot further to go. And the other obviously is equity release models, which I think has started with a slightly bad name in terms of the deals not being great, but clearly there's sufficient competition in the fintech world that there'll be lots of ways that you can effectively sell a tenth or 20, 30% of your home and still retain control over it. And I think when Gail talks about liquidity, I think that's another dimension of getting more liquidity into home ownership.
Yeah, questions come up here. What will be the main What will be the main driver for transaction-based portals to be successful in an emerging market? What is the main driver? What are the main drivers?
The main driver is literally the growth of those markets. I mean, the GDP growth and the wealth growth in these markets, because I mean the portals are there, and the more real estate transactions are happening in these markets, and the more cross-border transactions are happening, the more portals will benefit from it.
Yeah.
There's a lot to say about the point. The first question is, they'll only be successful if they have liquidity, and liquidity is an acceptable price. Purple Bricks in a non-emerging market has blown a huge amount of capital in building that liquidity in the form of visits to its site. So that's the demand side, and then clearly you've got this whole issue of how can you create reliable, transparent data in markets where you don't necessarily have land banks, you don't necessarily have a clarity of ownership. So something will have to happen there with blockchain or simply better digitization of land tenure. And then you've got this whole, how does the ultimate process work? So I think it's so easy for us to talk about it. To actually make it happen, it's a huge task, and it'll be very interesting to see over the coming years how different players are dealing with this and addressing these challenges. But I'm quite sure they'll get there.
I have a different perspective on this. I think when I think the main driver of success is actually not an action you do, but an attitude you take. Okay, and I think what you see is there are the people who should be making the jump will be hesitant of making the jump. Why? Because of the value that they've got tied up in their current businesses. Okay, whereas I think that the ones who will truly succeed are those who take that huge leap of faith and rapidly go into a transaction-based market. I think it gets very hard to have your foot in either camp, and you either believe that the future is transaction-based or you don't. And if you don't, then keep doing what you're doing, but if you do, then move fast, make the investment. You know it's going to be a bit rocky, but you're trying to build a business for the future. So I think it comes down to attitude or a desire to succeed, which I think is going to be probably the biggest driver. I do think what happens is management goes, yeah, but then there's part of their back of their minds going, oh shit, the board, and I've got shareholders, and I've got all a bunch of stuff, so I better keep safe. So I think there's a challenge there.
I mean, it's the classic innovator's dilemma, right? Do you disrupt your own business, or do you not have the guts to do it and you allow somebody else to? And I think what's fascinating in this part of the world is relative to Rear Australia, Rightmove UK, Immobilien Scout, there is very little revenue coming out of classic listing space portals. So there's much less to lose here and much more to gain potentially in terms of getting a share of the action.
Great. So parting thoughts, before we wrap up, if we're sitting here in 10 years' time in episode number 60 of these conferences, and I'm still vertical, what are we going to be talking about?
I think, by then, obviously the whole area of blockchain and AI have become really, really fully integrated into it. So I don't know whether we will be talking or some bots will be talking on our behalf. I hope there's other smarter people talking then. But I actually do believe by then we're talking far more of a global real estate market. So it will hopefully have become much, much easier to invest globally into real estate, not having to rely on the opinion of real estate agent, but the data available for everyone, much more liberal property market. That's what I would expect. And transactions being very, very easy because they're all happening in kind of a 100% blockchain or whatever type of environment, the transaction.
It's hard to disagree with that. I think we'll look back on those sort of dusty era where people, rather like we do now on the travel agent era, right? We'll look back and say, why did we really have shops with people in them that you went to talk to if you wanted to buy a property? Because it will be hopefully very seamless and online.
And I hope that in 10 years, 3B is still sponsoring the drinks.
Yes. So do I. But they may be called something different by then. The name keeps changing. How can the role of the regulator be encouraged to ensure a transactional portal framework? What will work and how will it work and not be hampered? Because there's some markets where clearly the regulator, for whatever reason, is making it harder for people to become more digitally transactional.
I think the key issue is land registry, right? Because how do you deal with that database? Do you make it open and a source which is effectively like an open resource, or does the government going to own it and then set rules which establish how the different transaction portals can access that database? I think there's a lot of unknowns on that, and that I agree could either accelerate or hamper this beautiful, sleek online process that we're all dreaming of.
I couldn't agree more.
Okay, what can an advertising-based portal do to move into a transaction-based one, which is another way of answering the question? Zillow is moving in a very careful, I don't know if careful is the right word, they're spending, what do they spend? They spent $300 million last year. I wouldn't call that careful, into iBuying, but it seems very costly for them. Yes, it is.
I think maybe the number one is learn from all, let's not call it mistakes, learn from all the learnings which those have made, and there will be many learnings which have moved into this space, and start today. And I mean, initially it's scary to disrupt your own business. I mean, we also went through this in the merger, because we had a couple of customers who would spend $150,000 with us on an annual basis, which we found extremely high, and we were worried that they would feel threatened by it. But I can tell you one thing, we have not lost one customer. I mean, some have complained, but often complaining means negotiation. But funny enough, no, seriously, funny enough, nobody is paying less. Everybody is paying the same or more of the old customers. So be bold, do it. Don't forget what you are and where you're coming from. I mean, you're the innovators, you're the entrepreneurs, and go for it, and make sure you build a scalable business, a sustainable business. Technology helps there a lot.
So my answer would be that Zillow should buy Compass and become a fully digitized end-to-end transaction platform. That would be the gutsy move, right, to create the $50 billion company rather than the overvalued 10 billion plus, which it is at the moment.
Yes, and clearly there will be a few little speed humps in the way in doing
There'll be a few, but the agents hate them already. I was at this conference in New York, and basically they are not seen as the trusted partner of agents. They're seen as already as a competitor in many respects, and that's why Inman was all about how agents become more self-reliant in using Facebook and so on to get their own leads. So the irony is it's happening anyway.
Yep. So the last question we're going to take is, 2 years ago the title of the conference was Getting Closer to the Transaction. What has changed since then is I needed another title. another theme. And the reality is we're not getting closer, we're in the middle of the transaction. Right?
Exactly.
Right, so there's one is what's coming, and the other is we're now there, so we're now thinking about what's next. And so, the good news when it's about disrupt or be disrupted, it's basically saying this is what's happening now. You have a choice. Keep doing what you're doing, and get the same or potentially worse results, or start doing something very different. And you're not alone doing it because it's already happening today. And my last thought is, I reckon in 10 years we'll be sitting and talking about a couple of things. One is the efficiencies that companies, so I think it's all going to be about efficiencies and how because transactions will be every day, they'll be online or mostly online. Rentals, no one will even think of doing anything more than doing the rentals online. I think commercial with what these guys are doing in Zufra, etc., will be far more online, but it'll always be the one that's probably the slowest, I think, through it all. And then new developments will be very much online. Lots of even like the online expos, etc., that Amar was talking about. Things will be driven just online. Do a booking, lock it down, then go look at it. If you're happy, convert it to a transaction, and away you go. And I think what we'll be talking about is how do we get that more and more efficient? How are we doing on the matching side? How are portals changing from being just a search where you're looking through hundreds of listings and hopefully you find stuff to everything is tailored for you. There'll be a lot of predictive matching. That's going, oh, Georg's having more kids or whatever. No, you've already got.
You have 7.
I know. Okay, 7's enough. But I think the point is they'll be able to predict where you are in your life cycle, and the right property will be delivered to you before you know, right? Before you know you need it. I think they're the stuff that we hypothesize about now, that we talk about, people are starting to do, but it's very baby-like in terms of truly understanding each of our needs and doing the matching even remotely well.
Without being too much of an idealist, the expectation would be that the consumer experience, whether you're buying or selling, should become as pleasant as buying or selling something else. So that it should be a pleasure to sell your home, or a pleasure to buy a home, and which is somewhere away from where we are today. And ultimately, it should be about customer journeys and making them feel right. And okay. It'll take some time.
Okay. Last question for you, Malcolm. Why do you believe in that the C2C? So why do you believe in C2C while the model is successful nowhere? I think what I'm saying is, what do you think that when...
So I think it's a great question. I think no one's really embraced it yet. So it's too hard to say. There are examples in automotive, also in France, a company called Capcar, which is doing this trust-enabled marketplace, facilitating the transaction between a consumer selling a car and a consumer buying a car. But we just haven't tried it out. I don't think any of the companies quoted there are serious, full-blooded, because remember, you've got to have the liquidity, right? You've got to have the liquidity of a decent portal. And the only really liquid portals in France are Se Loger and Le Bon Coin. So I don't think we've looked at it yet. There have been some for sale by owner businesses in the past, which is more like sort of a bit of hand-holding for consumers who want to sell, giving them signposts and things to put in their backyard. It's sort of nothing like the vision which I was hoping to paint this morning, in terms of really having that integration between a brokerage, a digital tech-enabled brokerage, and a high-traffic platform. But we'll get there.
Fantastic, guys. Thank you very much.